Hello once again guys, welcome back to the channel. I hope you're having a great day so far. So what we're going to be talking about in this video is a very interesting topic that I haven't really ever covered on this channel, and that is basically the minimalist's approach to investing. Now, minimalism is a type of lifestyle that is actually very appealing, and it's this lifestyle idea of less is more, and you want to have a simple and passive approach to anything that you are doing and basically declutter your life and get rid of a lot of these annoyances or unnecessary parts of your life that are consuming you and bringing stress towards your life. And so what I want to do is take that philosophy and apply it to investing and talk about what might the investing strategy look like for a minimalist who is looking for the simplest, low-stress approach to investing and building their wealth. And so what we have here is what many people have dubbed the lazy investing strategy. But what I want to show you is that in most cases, being lazy is a bad thing, but when it comes to investing, being a lazy investor can actually work to your advantage, and I'm going to explain exactly why that is in a little bit. So when it comes to investing in the stock market, you have a number of different options. You can go out there and you can invest in a mutual fund and let somebody else manage your money for you. Or you can also pick individual stocks yourself and be an active stock picker or do active portfolio management. But a lot of people have no interest in researching stocks or spending 2 to 3 hours a week or more, managing their portfolio. And they just want a simple solution that's going to allow them to grow their wealth without causing them stress or anxiety. And that solution is index funds. Rather than buying into a mutual fund where an active stock picker is trying to beat the market, you're instead just going to own the market through what is called a low-fee index fund. Now, why I said the lazy approach might actually be a better approach is because these active stock pickers, these professional stock pickers, are actually doing a terrible job at beating the market. So there was a study that looked at the success rate of mutual funds beating the market. And what they found is that roughly 1 in 20 actively managed funds beat the market, so around 5%. That means that if you looked at 20 professional stock pickers, one of them out of 20 is going to beat the market. The other 19 are going to fall in line with the market or fall under the market. So just to summarize this here, you're paying these professional stock pickers to manage your money for you, and 95% of them are failing to do the job and actually get you a return that exceeds the market. And so that is where index funds come in, where you can literally just own the entire market rather than trying to beat the market. And you can do this in a very passive way that aligns with that minimalist lifestyle. So there's actually two strategies here for, passive investing. One of them is a hands-on style. That's somebody who wants to be a little bit more involved with their portfolio. And then there's a hands-off style, somebody who doesn't want to do a damn thing, and we're going to cover both of those. So first of all, let's talk about the hands-on lazy investing portfolio, and we're going to talk about what is dubbed the 3-fund portfolio. Now this comes right from Bogleheads, which is a Wikipedia page for investors. I'm going to link it up in the description below, this article on the 3-fund portfolio. But it's essentially 3 ETFs that will allow you to have well-diversified exposure in both stocks and bonds. The first ETF you're going to own is a domestic total stock market ETF. You're capturing the total United States stock market in a fund, and one example of this is a Vanguard ETF called VTI. Number 2, the second component of this portfolio is an international total stock market ETF. So you want domestic exposure as well as exposure to global markets. And one Vanguard fund that can accomplish this for you is VXUS, offering you international stock market exposure. And then the third and final component to this 3-fund portfolio is simply a bond total market ETF, some exposure to bonds. That way you're not so heavily involved in stocks. And another Vanguard fund that people often like is BND. The amount you have in each of these 3 funds is going to be different for every person. In most cases, younger people are going to have more risk tolerance. They have more time to allow their money to grow. So they're going to have more money in stocks and less money in bonds. As you get older, you want to have less risk involved in your portfolio, so you have more money in bonds and less in stocks. And over time, you have to do what is called rebalancing, or basically changing around your portfolio to make sure that those levels stay the same. And that is what makes this the hands-on, lazy approach to investing, is despite the fact that you're just plopping your money into these ETFs over time, you are going to have to keep an eye on the allocations and make sure that if you wanted to have 10% of your money in bonds, that it stays at that 10%, because the prices of these funds are going to change all the time and you're going to experience what is called portfolio drift. Now, is that going to take a crazy amount of time? Absolutely not. You could probably accomplish this with about 30 minutes to 1 hour a month of work, even less if you can automate the entire process. So we're not talking about a lot of time here. And the advantage to this is as low fee as you can go when it comes to investing. You're not paying any management fees. You're not buying into a mutual fund. You own low fee index funds. You're capturing exposure to the entire market, and you're not trying to beat the market or actively involve your time with your investments. Now, the second approach to this is the hands-off, lazy approach. Somebody who doesn't want to be involved pretty much at all with their investments. They're not interested in learning about portfolio allocation, and they know they're going to forget to rebalance their portfolio, so they're looking for something to help them with that. And the solution for that is the modern brokerage or robo-advisor, and I'm going to give you guys two different examples of them. Now, just to be transparent with you guys, I am affiliated with both of these companies. I have links in the description if you choose to use them, but you absolutely do not have to. I just leave them there in case you guys are looking to support and give back to my channel at no additional cost. But number one here is a robo-advisor called Betterment. And what Betterment does for you is they build a custom portfolio around your goals. So if you're a 35-year-old person who has student loans, but you're also looking to invest for your future and you don't want to manage your portfolio, Betterment could build a custom portfolio based around your situation. And the advantage here is that they are going to rebalance that portfolio for you, and they're going to determine your allocations and how they're going to change over time. The disadvantage, they do charge a 0.25% annual fee to manage your money. Betterment does give you peace of mind because you know you're getting professional guidance with your money at a very low annual fee, and you don't have to do anything except for add more money to that account every month or whatever interval that you are doing that. Now, if you're still looking for that hands-off approach and you're not interested in paying any fees, number two here is M1 Finance, which is a cutting-edge brokerage company that has really disrupted the industry. And that is because they offer an array of different pre-built portfolios. They're not customized or tailored to any one specific person, but they are fee-free. You're not paying any fees to invest with them. And one of the popular portfolios they offer is called a TDF, or a target date fund. Essentially what you do is you put in your ideal target retirement date, and that portfolio is allocated with stocks and bonds at a risk level that makes sense for that target retirement date. Now again, it is not tailored to any specific person, but these pre-built portfolios are oftentimes a better option than going in there blind and trying to figure out how to allocate your own portfolio. So that is option number two here, using a pre-built portfolio on the M1 Finance investing platform. Now, like I said, guys, if you want to learn more about M1 Finance or Betterment, I've included some resources down below. I have review videos of both of these platforms, but I think they're offering great services, especially for the passive investor who doesn't want to be spending hours every single week managing their money. And if you do want to do that, if you want to take those additional steps and save those fees, you can be that hands-on investor, and I would consider looking more into this 3-fund portfolio, which again is linked up in the description below. But anyways, guys, that is the minimalist approach to investing. Let me know in the comment section below whether you are an active investor or are you more of a passive investor, and why you've decided to, do this. And what your idea is behind your investing strategy. But thank you guys so much for watching this video. I hope you enjoyed it, and I will see you in the next one.